Hi, Akleen. Hi, Daniel. Hi, Helen. Hi, Michael. Hi, Precious. Please feel free to use the chat to introduce yourself. Today is the second webinar for this week, week 4, which is on budgeting. And like you can see, we have our presenter with us, in the person of Prof. Elizabeth Kalunda. Welcome, Michael. Thank you for joining in. We'll just give an additional minute for more participants to join, and then we'll kick off. Hello, thank you for joining. So today's webinar is Introduction to Financial Management. On Tuesday, we did talk on Introduction to Budgeting. And today we're talking on financial management. We still have Prof. Elizabeth Kalunda here with us, and she's going to be talking to us shortly. But in the meantime, please feel free to use the chat to introduce yourself and where you're joining from, and if possible, what you hope to take home today. Hi, Lenty, welcome. Hi, Dr. Mufolo. Hi, Stephen. I'll be starting in 1 minute. I'm just going to let a few more people join and we'll kick off with introduction. Good afternoon, Daniel. You're welcome, Lenty. Okay. So there's an announcement from this is for the NGO CBO group. So we had, for the needs assessment, we had our presenter, Tiwonge Mbale Ziambo, and she gave us an exercise that's for the CBO NGO group. Please, if you are working on that, she would like to assess it. So please send me a message if you have that ready. And with that, I would start by introducing our presenter for today. So I'm going to be sharing a brief bio of our presenter, Prof. Elizabeth Kalunda. Prof. Elizabeth Kalunda is the chairperson of the Institute of Certified Public Accountants of Kenya, where she provides strategic leadership in shaping the future of the accounting profession. A certified public accountant, she brings extensive experience in accounting, financial management, and governance. She also serves as a director at Lofty Coban Investments Limited, where she leverages her expertise to guide investment strategy, enhance corporate governance, and support sustainable business growth. In academia, Prof. Kalunda is an associate professor at the United States International University, Africa, Nairobi, Kenya, where she teaches and mentors students in accounting and finance. She holds a PhD in business administration from the University of Nairobi, specializing in banking, and is also a certified professional mediator, a role that strengthens her ability to navigate complex decision-making and resolve conflict effectively. Prof. Kalunda is passionate about empowering the next generation of finance professionals through education, mentorship, and thought leadership in accounting and finance. And today we are going to be learning from Prof on what it entails when we are talking about financial management. So if you have any questions around that, feel free to have them ready for the end of this session, so you should attend to them. Thank you so much for being with us today, Prof. And on this note, I would want to turn it over to you. Thank you.
Okay. Yeah, thank you so much, Precious, for that introduction. I'm happy to be here again today. I've seen the members of the academy just logging in and saying where they're coming from. I'm happy again to see it's quite a good distribution from the African countries, and I'm sure we are really going to have a good interaction. So as Success has said, if you have any questions, feel free to put them in the chat and I'll be able to handle them. But my key thing is by the time we are done with this session, sorry, you'll all have at least met the objectives that you wanted. And I'll also leave my contacts behind so that you can be always free to reach out to me. So the topic that we'll be handling today is an introductory section, and this is an introduction to financial management. And looking at the profile of just the members of the academy, I believe that you've gone through certain training, and at the end of the whole program, you should be able to just have that understanding and skills that are needed for you to run a successful business. If you've been given the grants, if you apply for it and you're successful, you'll be able to manage those finances well. So this session is meant to enable you to just have that required skill to take you through the management of your finance so that your business is going to thrive and it's going to grow. And I will be hearing stories about you in the newspapers about this is the most successful business. So that is actually what I'm hoping and wishing for all of you. So how is this going to be discharged, or in terms of what are the learning objectives? So we'll be having three main learning objectives, but I'll break it down into smaller topics. And let me take this opportunity, to thank Liz. She's the one who's actually running the slides on my behalf. So by the time we are done with this session, you should be able to understand the significance of financial management for businesses, and especially businesses that are starting up, businesses that are young, so that the business can be able to grow and be a big business. Again, you'll be able to learn the key financial challenges that are unique to businesses, especially in the profit making and the non-profit making, and also the ones that are for profit. And finally, you should be able to comprehend fundamental financial principles and tools for managing finances effectively. So as we start and as I introduce the topics, I'd be happy to just hear your story in terms of how far are you in your business? Are you at the concept stage? Are you at the ideation? Are you scaling it up, or you've just begun? So that as we share, we can be able to share in terms of the experiences that you have in financial management. So you can see the presentation outline. We'll start with just basic introduction on what financial management is all about, and just why we need financial management. And then we go to the definition of financial management. This will be followed by financial planning. And something very key when it comes to finances, we must manage and control our expenses. So we'll get into depth in terms of how we control our expenses so that they can be manageable and as per the plans. And then we look at the key records that you have that will help you manage your finances through financial planning. And then finally, we look at fundamentals for managing finances effectively. So broadly, that is what the discussion will all be about. So looking at the charts and the conversation, I can still see your distribution is quite good. Looking at Africa, I can see we have members from Lusaka, we have Rwanda, we have Nigeria, we have Kenya. So let me see more of the countries so that I can also be able to, maybe we can share experiences from our different countries in Africa. Thank you, Derek. You say you have a business, but still in the conceptual stages. Um, so maybe Derek, if you could maybe give more insights. When you say at the conceptual, does it mean the business has begun and it is in the early years, or it is in the paper phase before you roll it up? And the others, please continue giving in your comments. So for me to introduce, okay, it's in the, I like it. You said it's in the paper phase. So thanks, Derek. So at least now you'll be able to get better insights of how now you're going to roll it up to be a real business. Now, looking at what is in the presentation, one of the key questions that any of us would have, especially for you who are young people trying to start up businesses, you are still learning, some of you are in campus, others have already finished, but you are still at that ideation stage. One of the key questions that will be in your mind, and some of these questions might give you some sleepless nights, is just asking yourself, if I open my own business, how much money will I need? That's a key question that I will definitely it will definitely be running through your mind. Again, now you'll be asking yourself, once you get those funds, how will you be able to manage them well? That's a question that you should actually have, and you should have an answer. And hopefully by the time we are done with this, you'll be able to have some pretty good ideas on how you're going to go about it. And then what is my plan if a major donor, client, or contract is lost? So those are the realities of businesses. You might, like Derek is saying, his business is in the paper stage. He might start maybe give proposals, get some promises on funds, but then something happens just along the way. So what will happen? Will it mean you close your business, or you just find a way of just doing how to go about it? So we'll be able to look at that. And then I can see Precious has said her business is in the early stage. So meaning probably it's in existence. Again, now, in case you've lost the finances that you had, will you need to borrow, and how will you do the borrowing? So those are very critical questions. Another question is, since we operate in an environment that is regulated, it's a structured, and I believe your businesses are also formal, a very important question will be, am I compliant with all the donor, tax, and regulatory requirements? And that's why now the record keeping will be so key to help you then comply to what the donors and the government will be needing. Another important question, do I have enough reserves to survive an unexpected crisis? We all went through crisis, through COVID. We've all maybe seen instances of some economic interruptions where whatever you had expected is not happening. So when that happens, should your business die with that event that is probably a normal event in the economic cycle, but you are not prepared for it? Again, am I using my budget in the most effective way? These are very key questions. And then finally, do I have enough cash flow to keep my operations running smoothly? Now, these are key questions that will baffle any entrepreneur, any business person, and even at a personal level. These are some of the questions you'll be asking yourself in terms of just surviving and running your family and your expenses from a personal finance side. So this course or this session will actually help us to understand that. And I want to start with a quote that I wish you will carry it with you, so that it will be able to always let you know that you can never get enough knowledge, but you can always prepare for the next step. And the quote or saying says, financial literacy is the best startup capital. And I want to repeat that. Financial literacy is the best startup capital. Now, I want you to go to the charts and just say, what do you understand by that? And I can say that this session that we are having and the many other sessions that you've been having, they are basically financial literacy. I'm not giving you any capital. Neither is success or Liz giving you anything. But you can see we are saying financial literacy is the best startup capital. So give me your thoughts around what this is, chat, and just give me what you think that is. And as we proceed, always know that that should always be at the back of your mind. And then once you get any finances, know that discipline and knowledge is what will give you long-term stability. And I know at the back of our mind, what we want is businesses that are going to be sustainable. So with that, and I can see you chatting to just tell me where you are. I can see Derek, and Derek thinks you're quite engaged. I like your energy. So the rest of the class, please, let's hear your view. So Derek is saying that financial literacy is the knowledge on sourcing and management of funds. Okay, let me see what Precious has. Precious says this is having knowledge, understanding of financial principles, which you're saying is more valuable than money when starting a business. Okay, yeah, so good for that. And I would like to hear more from the rest of the members of the academy. And I want to agree with you. What we are saying is that you must have knowledge before you start anything, because most businesses will require money. You must have knowledge on how to manage your finances. Because if you have capital, if you have money, but you don't know how to use it, then definitely your business will not survive. So that is the first starting point. Now, with that, the next question is that what are the key financial challenges that businesses have, just before we go to the definitions? Now, we are saying that when it comes to CBOs and NGOs, they face certain financial challenges. Now, these challenges are actually the ones that now will just like let us know whenever we are managing finances for the NGO CBOs, these are things that we need to look at. Now, one challenge that they have is dependence on external funding. Now, we know that especially somebody at a younger age, like you, and even those of us who have been working, we know very well that will never have enough of the funds that we have. We know that in the NGO space, the CBO space, we get our finances from external parties. And we do this through writing proposals, maybe getting connected to somebody who has a similar mission with you. But that has a unique problem because it makes the business or the person become over-reliant on grants. And looking at how the world is moving, now we've seen that most of the development partners are actually cutting off their spending. And we saw this very clearly globally when Trump became the president of USA, and he's cut off most of the grants that were not on emergency basis. So if your business was the one that is being affected, what would that happen? I mean, or how would that maybe affect you? So it is important that for those of us who are in the CBO NGO sector, always know that these finances you are getting might not be there forever. So what should you do? And I liked when I had the other session with the other group, I was telling them that you need to look for profit-making activities within your CBO that can actually support you in case things come to a halt, especially unexpectedly. Again, another challenge that is there is there's restricted funding. Now, as a donor, donors normally have their priorities. And these priorities are based on their strategic plans, their initiatives. So they will only fund activities that are related to certain activities that are of interest to them. So therefore, that means that you cannot use funds for activity A to do activity B, as much as that activity B could be very an emergency or something of great priority. And I've given you an example here. A CBO can't use training funds to repair leaking roofs, as much as that is an emergency. Again, a challenge that is there, we always have cash flow gaps. This means that funding does not come in one tranche, it comes in tranches. And this can actually create periods of low liquidities, periods of stoppages. So, and these delays have other consequences. Like the example I've given you, we can have salaries delayed, and this might affect the morale, and even they can make the turnover of the staff be very high, which now again disrupts the activities of the NPOs. Again, we have complex compliance and reporting, I believe, and especially most of you who are going to be in that space, please make sure that you look at what are the donor requirements and you find a way of complying. And if you find that, especially now as your businesses grow, or even if when you get jobs in such organizations, if you don't have somebody who is a specialist in that area within your business, if you have a project and the fundings came on up for the project, can you employ an expert to do that? Otherwise, you'll get into problems with the regulator and even the donor. Again, for the NGO CBOs, they normally have a problem in measuring non-financial returns. Remember, the main goal of an NGO or a CBO is the social impact. But the question is, how do we measure social impact? For a profit-making venture, this is so simple. You just look at profitability, meaning I put 1 shilling, I want to get more than the shilling. So there's that problem of trying to measure. So for you to be able to get your funds rolling, to manage your funds well, you must have a metric of just knowing how will you quantify the progress or the success of your business, and then sustainability beyond the grant. So this is a problem that is always there. So some CBOs or NPOs will just run for a period of time. Now, why did I bring that concept faster? Now, looking at what I've brought in as challenges, all these relate to finances. And therefore, it is important for us to know how to manage finances so that one, we can be able to be compliant, two, we can finish the activities we intended, three, we can be able to report the social impacts, and finally, our businesses should be sustainable beyond the grant. That is what is our desire. So now as we move to the next slide, we want to also look at the profit-making challenges. So these ones are just run them very fast because these are things that these ones are a bit common. We have interacted with them. So one, there's revenue volatility from market forces. So in any business, and I wish as you chat, please also tell us what kind of businesses are you having in mind? What venture are you hoping to run after you're done with the training? So one, you'll note that your revenues, if I use simple language, your sales will not be consistent over time. There are periods when you'll be having so much and periods that will be having less. So you need to plan. How will you smoothen the cash flows? Because the salaries will probably remain the same, or the fixed expenses will remain the same, irrespective of the amounts coming in, the revenues being less or more in a certain period. So it is important to note that. Like, and the example I've given you, if you decide to run a cafe, maybe income will be more during, if it's near an office, when people are in office, there'll be business. If it's now Christmas time when all businesses go close, there'll be no class. So you can see there's going to be that fluctuation. So again, it might also depend on the period of the month. When people have been paid, there'll be more customers coming in. When it is that dry part of the month, there'll be less. So it is important to just know that means then you need to find a way of managing your finances. Again, we all have pressure for profitability because that is what is our goal. We also need capital investment needs. We need to buy fixed assets, which are going to help us run the business. This need a lot of capital injection. We need to, sometimes when we sell or we offer our services, it could be on credit. So we need to know how to manage the collection of debt. There are some things we might buy on credit, so we need to know when to pay. Again, we are not producing everything that we need. We'll be purchasing from other people. So we have that supply chain, and it comes with its own risk because we are not in control. And for example, the example I've given there, your clothes, if let's say you are selling clothes, and then it's Christmas, the holidays are about to come, you need to buy these things to sell during the period, there could be delays. Now, these delays will definitely affect your sales. And when those goods come at a later period, which is not the correct one, probably the customers will not be needing them anymore. So you need to plan for that. And you can now need, if you know that they are likely to be delays, then you need to start ordering your clothes now. We are now in October for December. That means then you'll need some capital to actually purchase that. So you need to plan for that. And then finally, we have regulatory issues, which I had already mentioned in the other case. So you can see when it comes to businesses, if you don't plan for your finances, then you are likely to get into a lot of problems because there'll be so many surprises on your end. And because of that, we need now to have and upskill on matters financial management. So going to the next slide, here now is where I'm coming to the definition. So what is financial management? And before I can explain what financial management is, please just on the chat, tell me whether you have a business or not. If you have a business, what kind of business, so that I can try to come up with examples that are really touching on what you're doing. And thanks, Mariam. Thanks, Niraja, for trying to just still explain what financial literacy is all about. So I come to the definition of financial management, and I start by saying that this is the heart and soul of a business journey. And if you look at your body and you know your heart and you know your soul, you know those are very important organs. So finance management or financial management is the heart and soul of a business journey. This is because businesses run through finances, run because of money. So this is like the blood, this is the life of the business. And because of that, we say that effective financial management is definitely vital for businesses which are for profit and those that are not for profit, as this will determine very key things. One, the ability to grow, the ability to adapt, and also their ability to remain sustainable over time. And I believe all of us would want a business that is growing, a business that is able to adapt to the realities or the demands of the market, and a business that will last beyond 1 year, beyond 2 years, a business that will have a legacy. Now, one reason why small businesses fail is because they do not manage their finances properly. And that's why we have stories of businesses that you'll say, yes, there was this business, but these days it's not there. And this is very common for small businesses. And looking at our research, we are told most of them don't survive beyond 5 years. They start falling after the second year. And this is because of issues that are, majority of the issues are tied with finances. Now, to ensure that a business does not fail, then we need to have a financial plan as part of your overall business plan. And that's what we are trying to learn on our end. So I want to now bring this back to NGOs, NPOs, and then I compare with profit making in terms of when we talk about financial management. I've given you the overall definition of what financial management is, but I want to do it now on a comparative study so that even when you make your decision, I'm going the the non-profit making, or I'm going the profit making way, you'll be able to know then what should be your focus. So from a definition, you can all see this is the process of planning, mobilizing, organizing, directing, and controlling financial resources. And you do this so that for the NGOs to achieve the organization's social mission and community objective. If you look at the profit-making side, the reason why we do the planning, organizing, directing, and controlling is to achieve organization strategic and profit objectives. So there's a very clear difference there. One is for profit, the other one is for the social mission. Now, in the two cases, financial management is able to help the firms to ensure that the funds are effectively, transparently, and accountably. So we are bringing in the principles or the virtues of efficiency, transparency, and accountability, all to ensure that the main goal is met. So if it's an NGO, the goal is sustainable and it is social impact. If it is for profit making, is to ensure that there's going to be optimization of profits. Now, what is the primary focus of financial management between the two groups? Now, for the CBOs, it is mission impact, community benefit, transparency, and sustainability. Whereas for the profit-making firms, this is basically about profit growth, market share, and return on investment. So you can see those differences very clear. And then funding sources, we have talked about that. For the NGOs, they will get grants. For profit making, it is through their activities like sales, investments, and all that. In terms of accountability, and this is very important because it guides on your ability to get more fundings in future, and also just to stay in business because you are complying either with the government or the donor. So in terms of accountability for the CBOs, NGOs, you have to be accountable to the donor, beneficiaries, regulators, and communities. For the profit-making firms, you have to be accountable to the owners of the funds. And these are the shareholders, the investors, and also regulators and customers, meaning you have to have goods that fit the needs of the customers. And then success metrics. For the NGOs, success is going to be through the change. For the NGOs, this is the social impact or the social change and the mission fulfillment. But for the profit making, it is profit margin, the market value, and the competitive advantage. So you can see these two businesses are very different in terms of their orientation, in terms of their objectives, and even the way they conduct business. So it's important for you to just note that, so that when you decide this is the direction I'm going, you are very clear in terms of what you're going to, the direction that you'll be running. So I'm still waiting to see the kind of businesses that you're running. I've only heard from 2 people. I would really love to hear what where the others are. And again, I said, if there's none, then you can just, you're free to say that there's none, so that you can now start juggling your minds between profit or non-profit. So, as part of financial management, whenever you start a business, you must allocate your initial capital wisely. And capital is the initial injection of finance to the business. If it is for the non-profit making, it will just be the initial amount you have received for the grant. This one, you must do it very wisely. I know if you get a grant, you'll have already presented a budget. So make sure you keep to the budget. If there are any changes, just maybe be very rational about the changes, because sometimes the budget and the plan that you had and the realities might be slightly different, but try to ensure that you stick to what you had planned. If there are any variations that are within certain thresholds that you must report, then go and report before you allocate. So allocate your initial capital wisely. And I've said, for me, that is a do or die. And then for proper finance management of those funds, will ensure that the funds are allocated to essential items like equipment, inventory, rent, and marketing. Again, it's important to note that without effective allocation, you might actually overspend in one area, and then you jeopardize your ability to cover other crucial expenses, which can actually be a total disaster in the business from the financial side. So as we move to the next page, I just want to go to the chart briefly, and I can see Michael is saying that he mainly runs a CBO, but in school I have a book. That's good. But in school I have a bookshop slash stationery business. Now, Michael, that's the direction we should have. Because you can see the CBO maybe sometimes might not get the fundings as you needed, or as you had projected. The CBO does not have a profit motive, but now the bookshop and the stationery can at least help you to be the funder of your CBO. That is quite good. Great for that. I can see we have Dr. Mofolo, who is a dentist. I take it that way because you are running a dental clinic in Malawi. And if I can, maybe Dr. Mofolo, in the chat, you can tell us, is your business, I know businesses, hospitals are normally registered as not-for-profit. But if I want to get more insights, are you offering services maybe for free or very subsidized amounts? Or yours is a business, if you have a business model where the business must be self-sustaining, or do you get some injections of capital from a donor? So please let me hear that from you. So so let the others also, their businesses keep coming, so that I can be able to get that. Yeah, so I'm happy about what you have. I can see Precious is saying she runs a formal clothing business that designs and sells professional wears. And I also an NGO focused on youth empowerment through skills, trainings, and education. Wow. I think success, your team is doing very well, the Wells Mountain team. This is awesome, because what I've been really insisting is that we should have those two sides, so that one can support the other one. So, and also you can also have just that the gist in your mind, and actually hands on how those two businesses are. So that's quite good. I'm happy to see what is happening with the ideas that you are giving. So with all these businesses that we've given as examples, it is important to note that as I previously said, that financial management is the heart and soul of the business journey. It's also important to note that finances are mainly in cash form. And because of that, we need to know how to manage the cash flow. Because as I previously said, the other time I said the heart and soul, now I'm saying that cash is the lifeblood of the business, excuse me. So if you mismanage your cash flow, you'll actually be in very dire financial situations that can lead to the downfall of your business. So it is important for us to plan and have that effective management. And also as you plan for your cash, because I remember when I was looking at when I was just comparing the non-profit and the for-profit, one thing I said the challenges is to have enough reserves. So it is very important that as you plan for your cash, ensure that you have a buffer for the lean months. Ensure you have a buffer for that period of the year when business is down, so that you can be able to run, you can be able to meet your expenses, and your business is going to remain afloat. So this is very important. So you need to anticipate, if my business needs maybe X dollars, at least I should always be having a certain amount as my buffer, or I should work towards creating that reserve. Otherwise, your business will have unintended stoppages, which are not good for anybody. The people you are serving, the customers you're serving, the social good that you are trying to impact, that one will be lost. So we can proceed. So let's look at therefore how we can manage our expenses and cost management. And the reason why this is a very key topic when it comes to finance management is that whatever finances that you get, whether it is for the non-profit making or it is for the profit making, for the profit making, you'll be getting finances from sales. You'll be getting finances maybe from equity injection, whether it is yours or you have other partners, so you'll be getting finances from that. If it is for the non-profit making and you have a donor, you'll be getting money from the donors and the grants. Now, that money is supposed to be spent so that you can run certain activities of the business. Now, the spending or the items that you spend the money on, that is what is referred to as expenses. So essentially, expenses are outflows. It is very important that you manage the costs, because if you don't manage your expenses, you are going to run out of cash. And when it comes to managing your cost, you need to find ways that are effective in managing the cost. So it doesn't mean you go and get low quality goods or low quality products, or you employ semi-skilled workers. Try and get the best place to source for materials that are of good quality and at a low price. Maybe you can also decide you'll be buying goods in huge quantities so that you get economies of scales. You can also decide that you'll be buying things from in a place when like maybe the countries that have seasons, you buy goods that are not for that season. Definitely they'll be on sale. So make sure you stretch the shilling that you have. And that's why I'm saying here, you need to understand the significance of why you need to control cost, which have really brought it out. Again, when you talk about expense control, it is not about making more money, but also keeping more of what you earn. So it is about stretching the ceiling. That's what I'm stressing. So why do we need to control expenses? There's definitely a relationship between profits and expenses, because profit is just the difference between the sales or the revenues coming in and the expenses. If the gap between those two is small, you'll have very little profits. The margin will be small. If the gap is there's no gap, then you'll be operating at maybe break even. If the expenses are more than the incomes, then you'll be having a loss. So this is a key profit driver. So learn how to manage your cost. Again, if you are able to manage your cost, you'll be stable, because you'll always be having a margin between the incomes and the expenses. It gives you a competitive advantage. When we talk about a competitive advantage, it means you'll be better than the other firms. So you can imagine like Dr. Mofolo here, who says he's a medic, he's trained in dentistry before becoming a medical doctor. I think in Kenya, our stories are the other way around. So he has a dental clinic for business purposes with flexible charges, catering also the disadvantaged population. It is a registered clinic with Medical Council of Malawi. That's good. So this is a really a registered business. I can see Auto Press Ebi is running a nursing home service in Nigeria. Just started, that's great. So now for all the businesses that you've given, starting from Precious, going all the way to Derek, you can see these businesses will need materials or will need some tools that you run the business with. So the question is, how do you manage that cost? Those are the cost of goods that you are selling. Make sure you source from the best quality that's possible, but at a good price. So you need to figure out, where will you get this? You can renegotiate amounts with your suppliers. And for you to renegotiate, then it means you must be also a good customer. Again, an expense like salaries, you can, for those of us who are on the NGO side, you can actually get a donor who, maybe you write a proposal, you tell them what you're doing to this some community, and they can agree to take maybe 50% of the salaries, and then you cater for the others. So you can see we have ways of managing cost. Again, another reason why that's important, you'll be able to mitigate risk. To mitigate risk, it means risk will come, things that you didn't expect, but you must be able to have a strategy on how to reduce their negative impact, or even ensuring that they don't come at all. Investor attraction, for either for profit or non-profit. If your donor or even your investors see that you know how to manage your cost, and intentionally you are on cost control, they will definitely be able to see this is a viable business, and then it also improves your cash flow. So you can see, when it comes of cost control, there are different ways that you can use that will help you to do that. So find out, look at your business specifically, and see what you can do. So we can move on. So I've given you different ways of trying to just identify their necessary cost. And I mentioned, make sure when I say cut down on expenses or manage expenses, I didn't say you do it at the expense of the services that you are offering. So you can budget, and we've talked extensively about budgets. I believe you know what budgets are. Very key, again, expense tracking, and especially for the small businesses that are starting up, the businesses that we are starting, make sure you track your expenses. And I said, when it comes to tracking expenses, make sure that you are tracking them in one app or one system. If you are writing them down, write all expenses in one place. Otherwise, if you have different places of recording the expenses, you'll end up losing some. And at the end of the day, you now start guessing, this is probably what I spent and what I did not spend. So make sure you are able to track that. I'd talked about vendor negotiation, inventory management. Should you have too much stock, or should you have just enough stock? The key thing will be, our intention is to get the best price for the stock and to make sure we are never running out of stock. And as we do that, that balance, the optimal stock, is that stock level that will ensure that we also don't have goods that are that are outdated. So I can imagine Dr. Mofolo here having some maybe some components that are needed in dentistry, but technology comes in, or innovation that says now these are the best, and you are still using the old ones, which you had bought so many. So you need to have a way of managing your inventory. If you know in a certain area, this is where technology moves, make sure you just stock enough for that. Otherwise, you might have compounds that you really don't need, and technology is changing. Again, we need to have lean operations. Now, for our businesses, they are smaller, but in case there are certain things that you can decide not to do, other people can do it better, just outsource that. For example, I'll still use the example of the medical doctor. If you need cleaning services, remember your core work is offering dentistry related services. So why can't you outsource the cleaning? If people are having tea in the office, why can't you outsource that? So focus on your key things, focus so that you can let the experts do what they are best in. And that's what we call the lean operations or outsourcing. And then there's one of you who had written about running a business where she's making clothes and all. Yeah, that's Precious. you run a formal clothing business that designs and sells professional wear. So you can look at, out of all these activities, what can you do for yourself and what can you outsource? And then once you are very clear, you can now decide to focus on what you need. I have a friend who runs a very formal business, and what she has done, certain designs that are maybe very technical, she has contract people who do those designs. So instead of having that person employed, she only uses that services when she needs it. So I find that to be a very innovative way, so that if you tell her, I want this, she will always have it. There are some things that she will do, some things she will not do. So she lets the experts do that. There are also others who will let people maybe do the cutting and the designing, and then they just so look at your business, look at what you can do best, what you can give out so that it's efficient and it is cheaper. Again, we have issues of energy efficiency. Try to look for maybe green power, digital marketing. This is a very good way of saving cost. These days, instead of putting an announcement in the newspaper, you just put it in Facebook for free, and you'll be able to get enough customers, and even customers beyond your current reach. We have employee training. Now, your business is as good as the people you have employed, or your business is as good as the skills that you have as the owner. So if you lack a certain skill, if your employees lack certain skills, train them. Otherwise, they will cause you losses that were actually preventable. Again, very important in a way of managing cost is customer feedback. We've always been told customer is king. I want you to know that customer feedback is very important. And when you are listening to customer feedback, just be very keen, because there's a study that was done, and the study said that 80% of the customers who said they are satisfied with your goods or services, they never come back. Why is that the case? There are some customers who are outliers who will complain, and then from the business side will say this one was just a troublesome customer. Now you can imagine if it's only 20% of the good ones who come back, then that means that some of them, some people are just good in nature and they don't want complications. So they will, if you are telling them, just give me feedback, they'll say everything good, good, good. But actually it is not good. So try to interact with the customer feedback. And if the feedback is 100% good, be very cautious. Those who say the negative, pay special attention, because they have taken their time to tell you what they feel is not right. And those who will tell you there's something that is not right, they have your interest at heart. That's why they are complaining. Otherwise, there are those who will say, I will never come back again. So let's be very keen on that. So we can move on to the next phase. And here now, we look at what are the financial records that we need. Now, to be able to manage your finances, you need information. You need well-structured information, and this information comes in the form of financial records. So we have different types of financial records, and the key ones are the financial records that tell you how the business is performing. There are these ones that will tell you at the end of the period, this is how the business performed. So we have the income statements that show the profitability, or the for the NPOs, we have the statement, then what is the name of that statement? Maybe they have the cash statement that show cash in, cash out, and then we have that statement that shows their performance, whether they had a deficit or not. We have the statement that shows the assets and liabilities that you have. That is the statement of financial position, or the balance sheet, as others can call it. We have now those internal statements that help you to run the farm. So you must have a record for debtors, a record for creditors. You need to do the aging so that you know when do I need to pay, when do I need to make the collections. So it is important that you have a systematic way of collecting that information and recording it. And it is important that you ensure that there are controls, especially if you have employed people and there's some authorization that is needed. Ensure you have controls in terms of what is the person who is entering the information the same one who will be approving it to go to the next level. So make sure you have those controls so that somebody else picks them up. Because you can imagine if I'm the one who is selling on credit and I'm the one who is collecting the money, I can decide to change some information because there's nobody checking on that. We can even agree with the person and I let them say that they pay, but we say, we'll assume that you have disappeared. So this is a bad debt. So it's important that we have those controls within the record keeping system. And currently, for most of you, you are in an environment where we have a lot of apps that are available for free. And you can use them open source. So make sure you can try to do that, but make sure you have a record so that if somebody asks you, how is the business performing now? You can actually have an answer, and an answer that is supported by actual business activities. So looking at the next page, this is just a pictorial way of showing you what kind of information you need. You must have, what is here, this is information that will be found in the balance sheet or the statement of financial position. You can see we have assets on one side, and the assets must be equal to what you have borrowed, that is a liability, and what is for what the owner has brought in. And this is a for-profit organization. So you must need those records. And I want you at your own time, because you'll get these slides. Just look at all these items, customize it for your business, and make sure you have a record of this kind of information, because this tells the story of your business. And since your business keeps running, it's a going concern, it's a business that is there every day, you might not have them at the back of your mind, but if you put them in records, you'll always have that information with you. Again, as we look at our financial records, just here I was giving you examples of things that are in the incomes, that are in the statement of financial position. You can see assets. I've tried to define these are properties that the business has, and depending again on the business that you have, your assets might vary. But one key asset that must be there is cash. And that's what we are trying to see how to manage. So I want you at the end of this, or as you just are trying to see, recapping what you've learned during this session, have a list of all the business assets that you have in your business and estimate their value. And the estimation of value here should be based on very factual information. You have receipts that you use to acquire them, so have that with you. Again, determine how do you make these purchases, because remember, we are trying to manage our finances. So are you going to buy in cash? Is the cash in your currency, or is it in dollars? Do you have a checking account? That's a current account. Can you borrow? How much can you borrow? If you are dealing with big business where sometimes you might not need, you might have huge financial needs, you need a credit plan, and you can negotiate this with your banker. If you feel like you need a huge amount and you want to lend it to the business because it is for the profit making, on the profit making side, you can look at where can you source a loan. And the loan should be a loan that at least is affordable in terms of the interest rate. Don't go for loans that are very expensive. And remember, these days, especially for us who are in Kenya, your borrowing will depend on your credit standing. So if you've been borrowing and not paying, you'll pay a higher cost. If you have been a good person and you have a good credit rating, then you'll be having cheaper loans, because these days we've gone to what is referred to as risk-based lending. So as businesses, be careful to make wise decisions about your wants and needs. And that's something I've really been stressing all the time when I'm teaching about finances. Make sure you differentiate needs and wants. Work with your needs first. The wants can always come if you have excess. So next, I want us to look at a sample balance sheet. And I just decided to give you one that has been worked on, but a very simple one. And you can see when it comes to this business record, the balance sheet, this one just tells us the assets and liabilities as at a particular date. And this is because the value of these assets keep changing on a day-to-day basis. So you can see we have the balance sheet, we have assets, we have the long term, we have the current one, where we also have cash. And you can see cash in a business changes on a day-to-day basis. That's why we want to know what is the cash on a particular day, and that is the end of the period. So decide, when does your business period end? Most businesses end on 31st of December, but that's not cast on stone. Just maybe depending on the business cycle of your business or their donor needs. There's some businesses that end in August, others end in December, others end in June. So it depends on just where the operations and maybe historically how the businesses in your area have been having their end date. Again, let's look at the liabilities. This is a profit business. And for profit businesses, we have liabilities. This is what you've borrowed, and equity, what the owners have given. So looking at this, you can see for this business, they have loans. They also have current liabilities like creditors. And finally, they have equity. And as I was saying that most businesses will like to know how much they can reserve. And that's where we have the retained earnings for the business. So that's typically how a simple statement will look like. So we can look at the income statement. This is again is for profit making. It just shows how did the business perform? Did you make a profit? Did you make a loss? And you can see we have the examples there. And when we were looking at management of expenses, if you look at the first item, this is the revenue, this is the sales. So if we go to Precious and her business in clothing, this will be how much have you sold from the clothes. Cost of goods, how much did you pay for the fabric? How much did you pay maybe for the threads to make that? All the things that you needed to make the dress, the laces, the accessories related to the cloth. If it is our doctor here, Dr. Mofolo, you'll be looking at all those components that you need. At least I normally visit the dentist for my tooth filling, so at least I have an idea. That's why I'm saying for this, you'll want to look at how much were the cost of those components, the disposables, what is that cost of that, and how much did you get from the business? So that's what we have there. And then cost management, now specifically to the operations. Remember, the cost of good is what you need to offer the services. So we have those other expenses. Work on these expenses. Ensure that they are as minimum as possible without compromising the quality. And then after that, if you had borrowed any money, we have the interest expense. If you had invested, you have interest income. So for the excess money that you have or the surplus, you can put it in maybe government securities, you can put it in the fixed deposit, and then you get some income. And that's the income we are talking about. And then if you pay taxes, you less, and whatever remains is the net income. So typically, that is what is the income statement. And it's just a balance between the revenues and the expenses. And that's why the management of expenses is very important, so that the revenues can be more than the expenses. So again, I want you to look at your business, look at the list of the incomes and expenses that you have. Make sure you have captured them so that you can be able to know how is your business performing. Next year we have, and I can see time is really chasing us, but I have 2 more slides. So when you are managing your finances, what are the key things that must be there? 1, you must plan and budget clearly. And you must link budgets to your strategic goal and your strategic objective. Secondly, you must keep accurate records. I talked about record keeping. Track every transaction for decisions and compliance. Next, you must manage your cash flows. Here you ensure that you have just enough cash for the business, and it will be there that when it is needed. So in seasons when you have excess, invest. In season when you are completely, you not have enough, you can borrow if you didn't have any savings. But don't wait until that time comes. People need salaries, you need to buy materials, and you have no cash. So manage your cash flows. Next, you must strengthen your internal controls. What does this mean? This means that You must put systems in place that will ensure your business is not having any leakages. And that's why I gave an example. If you're capturing all your transactions in an accounting system, make sure not one person has the control of all the different activities. Make sure the person who enters is different from the one who approves. If you want to make any changes, it must be approved by somebody else. Otherwise, there can be a lot of alterations. So ensure that you have those internal controls. You need to be transparent so that information is shared with the right people. And even maybe if I go back to the examples of the businesses that we have, we've talked about, when I'm looking at the strengthening of the internal controls, even within your business, when people are leaving, are they carrying things from the business? Are people stealing medicine? Are your staff maybe doing things that are not? So put controls to ensure that that does not happen. And you can now just decide which will be the most effective controls for your business. Again, build reserves. I've been very vocal about reserves. Make sure you have some savings for stability, for rainy day, and for growth. Again, stay compliant, and be ethical. Businesses that thrive are businesses that are based on integrity and they have moral standards. And then finally, invest in capacity and tools. And you can see some things I'm repeating, and this is a way of just re-emphasizing. So as we wrap up, I came up with an example of just a community project and just looking at what you might need to do to ensure the business is running. I would want you to try to attempt it, and I'll be able to give success the answer so that you can compare whether they are similar with you. And if I can read it, it just says Roots and Rhythm Collective and CBO in peri-urban area has received a cultural preservation grant to establish a community art and heritage center. The center will host workshops in traditional crafts, music, and storytelling, while also serving as a venue for cultural festivals and artisan markets. So you can see one, where did they get the money from? They have received a grant. What activities are they engaging in? Very clear. What is the purpose for this? You can see it is cultural issues. So that is the mission that they have. So the questions that you need to answer is, how can Roots and Rhythm balance cultural preservation with modern market demands for creative products? Now, this is bringing innovation and creativity in your business. And then also note that you have received a grant. So you must make sure whatever you do is aligned with the mission of the donor. Otherwise, you might end up having problems with them. But the key thing that I'm just trying to bring in that question is you must always be innovative. Don't be caught up by time, or you become very archaic, that you are offering products, yes, that serve, but they cannot stand the demand for tomorrow. So always think ahead of time. Again, another question, what are the potential benefits and drawbacks of investing in a permanent performance base? Now, this guy has a grant. If he does a permanent thing, what will happen? Now think about it, because those are some of the things that will be going through your mind when you receive a grant or when you want to start a business. Again, how can the organization ensure the center remains financially viable and relevant to young generations? You can see here the question is financially viable, and it has a target audience. So how can you do that? Same question you'll ask about your business. And then finally, which cultural, social, and economic indicators can be used to evaluate the center's success? So again, these are very, very good questions. To probe your thinking, I'll give you just some draft or some sample responses, but I want you to, after you've answered this, try now to put the example as your business, and then see what are the likely things that can arise that you need to really know, and you need to address them early before they happen. And that's what is called strategic thinking. So as I wrap up, just note that financial management is very critical for any organization. Next, effective financial management is very essential for achieving the organizational goals. so that you stick within your mission and also ensuring long-term sustainability. Your business needs to go beyond today. It needs to go beyond tomorrow. It needs to be there for years to come, years on end. Again, finally, by understanding the key areas of financial management and utilizing the appropriate tools and techniques, your organization is going to make informed decisions and optimize their financial performance. So, my dear students, 1 hour is really short, but I'm happy and thank you for listening to me. If you have any questions, you can ask. And I was happy to have this session with you. And sorry for really taking you fast. I was feeling like I was taking you faster, but I wanted to constrain myself within the 1 hour. So success, Liz, to you.
Thank you so much, Prof. That was such a beautiful presentation. And it was really good to see what the participants are also doing in their own little spaces. Thank you all very much for being highly engaging and sending in your responses. We are really proud of what you're all doing. I want to ask if you have any questions, please. This would be a nice time to just put that in the chat or the Q&A so that Prof can attend to it shortly. Thank you for your patience as well for staying this long. And yes, 1 hour is actually too short to get a lot from you, Prof. You have so much knowledge and so much experience. 1 hour is really short, but that's the constraint that we have. Thank you very much.
So I'm hoping the no questions means that they have understood, not that they have no question to ask because they didn't get anything that I was presenting. So maybe some assurance that you got something, I would be happy to just know. Did you find this useful? Is it going to make your business better? I would be happy to know that. Yeah, thanks for those who are thank you. Yeah, thanks for the confirmation that you understood. Yeah, thank you.
Absolutely. Thank you very much, everyone. It was really insightful. There was a participant that did ask something during the registration, and I hope that they are here and they've gotten that knowledge that how would you minimize people stealing from you. So I think it boils down to financial management. So if you're able to put in the clear processes, you'll reduce the chances of having your employees cheat you. So that's something to also take home if you were the one who asked that question during the registration process. Prof have touched on that. And the slides will be shared as well. Please try to use the example, the case study to put in your own NGO, CBO, or business and try to answer those questions because it's going to help you a lot. Thank you so much, Prof, for that case study as well. So we're having very good comments from the participants. Thank you all so much for engaging. I think at this point we can call it a day if that's fine with you, Prof. Any last words?
Yes, my last word, and this is in response to the maybe, yeah, actually, I wanted to say what Precious has put there. For your business to survive and to survive for a long time, remember we have systems, we have peoples, we have processes. People are the key things because the processes can be automated, the systems can be automated, but people cannot be automated. Make sure you have enough controls. These controls can be maybe mechanical or physical controls where people can be checked. They can be automation, like the example that I gave you. So just make sure, look at the nature of your business, look at where are the likely loopholes and put controls around that. And one very important loophole is just rotating people. If you rotate people, if you rotate people, there'll be no collusion. But if people get used to the system, they'll just decide the three of us, let us maybe like make the entry, I will approve and we'll do together. So make sure you keep rotating if your systems are not very highly mechanized, so that there can be no collisions. But for me, I say internal control is very, very key. And also have skilled people, skill yourself. That's why I say financial literacy is important. Those are the key things that please let them be your takeaways from this. Thank you. Success.
Absolutely. Thank you so much, Prof, for such an insightful session. We really appreciate you. Thank you, everyone, for also staying this long. We appreciate your patience and your engagement. Thank you very much. And I really hope you apply all that you've learned here today. All the best.
Thank you. So bye, all of you.